Welcome back. Welcome back. All right, give me a second. Let me go grab some coffee so I don't gotta get back up. And then we'll get into this, give some people some time to come in. Be right back. 1 second, y'all. I'll be right back. All right, I'm back out. Coffee refilled. Let me drag my chair from the other side of the room. Hold on. I'm here, gang. I'm just setting up. Welcome back. Welcome back. Got a good amount of people in here now. What's good, Joe? I'm still waiting on my new office chair, man. They got me sitting in this low ass Herman Miller. Give me a second. We'll start up. Be distracting once we turn on the info. Boom, boom. Sideways is good because we're about to do this Cypher School class live, so we need some time for Bitcoin to chill out. All right. All right. Again, if you're not here for this, it's not a big deal. Right? Father's Day. So I'm just going to run through some of the Cypher School stuff that we were going to cover today, but I'll do it live. And then during the next class, we'll have the in-depth. I'm just going to cover the overview, sort of the thesis for the strategy. And then we'll get into implementation during the next class. Trolling will be at a minimum while I'm doing this. So warned. Or else we'll just do this in the auditorium. But I figured it's Father's Day, right? Let's give a little. Not even worth doing right now, Bond. We're very far. Very far. I'll show you real quick. Crazy thing is I didn't even say your name, Def. You ever heard the term that a hit dog hollers? Should Google it. When someone throws a rock, only the dog that got hit makes a noise. So we finally broke the leading span B, right? Which is why I say that we've got a way to go. We already did the math on the drop. We know that we're only halfway through it. The 2-week baseline is just now starting to sort of show some weakness and make that move down. But we've got quite a while. And on the weekly, we rejected nicely off the baseline when it was important. So nothing to see here. Everything is cool. All right, so for those of you that haven't been in Cypher School, the last chapter and a half has been over our 3 trading identities that we have in the Discord, right? The snipers, the surfers, and the scalpers. We've gone through each one of those protocols, and now we're starting to get into some of the hybrids. Right? The last class, we got into like hybrid, snipe, and scalping. And now we're going to talk about swing trading, which is basically hybrid, scalp, and surfing. when you're going to get into swing trades, it's a lot more than just technical analysis that goes into it. And this is, in my opinion, where a lot of people fail. A lot of people only trade day trades, intraday trades, scalps because they don't have the skills that it takes to trade swing trades, because it's way more than structure. Right? It's everything we cover here: macroeconomics, monetary policy, all the external factors, narratives. So this is when we get into a bit of the deeper stuff. Let me get rid of these logos. A second. And let me feed all of this to the clankers so that we can listen to the podcast when we're done. So far, yeah, so far it's not a very impressive W at all. All right, so we're going to go into this content on chapter 9. If you guys want to watch Bitcoin, keep it on a side chart and take advantage of Bitcoin going slow here. It's going to come down to the ghost of CME for no reason, in my opinion, anyways, but we don't know if it's going to pop up and try to retest the bottom of that flag before it goes. This W is very weak. I'm here for the dagger. Volume's coming down, price is going up. All right, so chapter 9. All right, YouTube, pull up my if you want to look at the Cypher School stuff, pull up my stream so that you can hear, because we're going to play it through YouTube this time. We know that if we break that neckline, that measured move is still viable, so we'll leave that there. Just want to clean up the chart a little bit. So, like I said, we've covered sniping, scalping, surfing. We've covered scalpers who snipe, snipers who scalp. Today, we're going to talk about scalp surfing or swing trading. So this one's for all the swingers. This is my favorite way to trade, honestly. Let's pull up. Give me a second here. Let me make sure I've got all of this in order. All right. Let me get rid of these logos. mic check before we get into all that. Let me know if YouTube and Discord. Everybody hit a duck.
I haven't heard from Duck in a minute.
No, did you hear the duck, bro? Did you hear the soundboard?
Yeah.
Okay.
I was talking about the mod, though.
Yeah. Guys, we're not about to do anything. If we drop, it's gonna be $200-300, y'all. There's zero volume right now. All right. Chapter 9, Volume 1.
For most retail traders, the market feels like a chaotic, turbulent ocean. They wake up, check the daily headlines, and desperately try to scalp quick profits from sudden bursts of volatility. They treat trading like a casino because they are hyper-focused on the unpredictable short-term noise. But step off the casino floor, and the reality of the market looks very different. 90% of financial market movements are not random retail noise. They are the calculated, physical footprints of massive, slow-moving institutional capital. To understand why, you have to look at the market's fundamental physical limit, the order book. Think of it as a menu of available passive liquidity, every standing offer to buy or sell an asset at a specific price. For a retail trader, executing a trade is easy. Your tiny order slots right into that menu. But imagine a hedge fund that needs to buy $1 billion worth of an asset. If they dropped that massive order onto the market all at once, there simply aren't enough sellers waiting at the current price. Their order would violently consume all the available supply, eating through the order book's tiers. They would be forced to pay higher and higher prices for every subsequent share, a hidden tax known as slippage and spread. They would drive the price exponentially up against themselves, bleeding millions of dollars in seconds. So, to survive, institutional whales must move slowly. They use algorithms to shatter that massive block order into thousands of tiny, inconspicuous pieces, feeding them into the market gradually. It can take days, weeks, or even months for a major fund to fully enter or exit a position. This physical limitation transforms market movement from a series of random jolts into a sustained, directional flow. For the trader, the injective shifts from guessing the next tick to identifying where these massive institutional footprints are beginning to appear. If these long-term institutional drifts dictate the direction of the market, the next logical question is, who dictates the institutions? What invisible force compels trillions of dollars to start moving in the first place? That force is the central bank. In the United States, that's the Federal Reserve. They hold the macroeconomic joystick that steers the global financial system. The Fed operates under a strict dual mandate. They are required by law to keep prices stable by fighting inflation, while simultaneously promoting maximum employment. Every decision they make is a high-stakes balancing act between keeping the cost of living down and keeping people in jobs. They execute this mandate primarily through the Fed funds rate. If the economy runs too hot and inflation spikes above their target, the Fed will raise this baseline interest rate. Suddenly, student loans, mortgages, and corporate credit become prohibitively expensive. Consumers stop borrowing, businesses stop spending, and the resulting drop in demand cools inflation down. Institutional money managers are well aware of this mechanism. When new inflation or employment data prints, they aren't guessing what will happen next. They know exactly how the Fed is mathematically forced to react, and they immediately begin reallocating their capital to stay ahead of the policy shift. This reallocation triggers a highly predictable chain reaction across every major asset class, starting with the bond market. When the Fed raises interest rates, the yield on U.S. government bonds goes up. Suddenly, an institution can earn a reliable 5% return completely risk-free, backed by the U.S. government. For a fund managing $50 billion, that is an incredible, guaranteed payday. So, capital exits riskier markets like tech stocks and floods into the safety of bonds. This creates a massive ripple effect in foreign exchange. To buy those lucrative U.S. bonds, global investors first need to buy U.S. dollars. That tidal wave of demand creates immense buying pressure, strengthening the dollar against currencies like the yen or the euro. Then comes the impact on commodities, driven by a metric called real yields, which is simply the bond yield minus the expected rate of inflation. When real yields are high, gold loses its primary appeal as an inflation hedge. Investors realize they can get a better, safer return holding government debt,
That's what's happening
causing
right
gold
now.
to suffer a long downward drift. But eventually, high rates choke the economy, unemployment rises, and the Fed is forced to reverse course. They start a cutting cycle to save jobs. Debt becomes dirt cheap again. Institutional capital abandons the suddenly low-yielding bond market, seeking better returns in risk-on assets, fueling bull drifts in the stock market and crypto. Global finance is a closed ecosystem. When headlines scream that trillions were wiped out in a stock market crash, that money wasn't burned. It was simply shifted mechanically into the bond market, driven entirely by the central bank's interest rate lever. Understanding this macroeconomic blueprint gives you the direction of the market, but knowing the theory is useless if you execute a trade 3 months before the institutions actually begin moving their money. To solve this timing problem, professionals look for physical footprints. The most reliable is the Commitment of Traders, or COT report. This is a mandatory weekly filing where the biggest market participants are legally required to disclose their positions in the futures market. By tracking a specific category called non-commercial large speculators, which includes hedge funds and major banks, a trader can peer directly into the books of smart money. You can verify exactly when these institutions stop talking and start actively accumulating long or short positions in alignment with your macro thesis. Combining the central bank's policy direction with actual positioning data provides a secondary layer of confirmation. It ensures that the theoretical macro bias is actually reflected in the capital currently being committed to the market. Once you know the institutions are moving, you need a precise framework to time your entry onto the wave. This is where auction market theory comes in. This visual is a volume profile. It shows exactly how much trading occurred at specific price levels. That thick bell curve-shaped cluster is called a fair value area. It represents a zone where buying and selling pressure are in agreement, generating volume as the market decides the asset is fairly priced. But when new macro data prints and the institutional drift begins, that agreement shatters. The aggressive influx of capital forces the price to break out of the fair value area and into a liquidity void, a space on the chart with almost zero historical trading volume. We call this breakout phase price discovery. Because there is no passive liquidity in that empty void to slow the momentum down, price moves rapidly and directionally. It will keep sliding through that thin air until the market finds a new, agreeable level to build a brand new fair value area. This approach replaces guesswork with a structural roadmap. By aligning central bank policy with the volume profile's footprint, the trader is no longer reacting to noise, but following the established path of institutional capital through the market.
All right, so surfers, once you're done with your Bitcoin trade, right? That's the easy one. That's the one that's easy to sort of hold. You know what the cycle is. All of your other macro trades are going to take a little bit more effort. Right? But the effort is worth it because you get to take those long macro swings. You get to pick up narratives and assets when they're pennies on the dollar before anybody else is interested. But it does take some effort. There's a method to the madness. We're just going to do an overview today. In class, we'll go way deeper, obviously.
Welcome to Cypher Academy Chapter 9. In this video, we explore swing surfing the institutional drift. We will move past the traps of short-term charts and learn to use deterministic capital flow tracking to navigate the market.
Retail traders often focus on 5-minute noise and arbitrary trend lines, leading to being harvested as exit liquidity. Conversely, the institutional reality focuses on long-term macro drift and order flow autocorrelation, allowing smart money algorithms to successfully extract capital. Institutions cannot execute billion-dollar market orders without massive slippage.
Their algorithmic solution is to chop large orders into micro orders, executed systematically. This creates predictable directional drift, allowing you to surf the drift rather than trading the chop. The Federal Reserve's dual mandate acts as the macro engine for global capital. When inflation is high, the Fed hikes rates to slow the economy. When unemployment is high, they cut rates to stimulate it. Institutional algorithms track this to predict market moves. The global bond market is the apex predator. Institutional capital flows to the highest risk-free yield. By tracking the spread between short and long-term yields, we watch for the inversion warning, a historically reliable indicator of coming recessions. In Forex, the carry trade is key. Instead of using support and resistance, institutions look at bond yield differentials. They borrow currencies with low interest rates to invest in higher-yielding assets, creating mechanical arbitrage and driving major macro trends. Gold trading requires understanding the real yield equation, nominal bond yield minus expected inflation. When real yields rise, gold often crashes as capital moves to bonds. When they fall, gold typically goes parabolic. Always track real yield charts when trading gold. Equities are driven by the systematic expansion of credit and central bank liquidity, creating a deterministic skew to increase over time. Avoid the trap of trying to short a rising market. Wait for the dip and align with the expansion. The VIX, or Volatility Index, acts as market insurance. It is mathematically bound to mean revert. During market euphoria, accumulate the VIX rather than shorting stocks. When retail panic hits, the VIX spikes, offering significant asymmetric returns. This matrix synthesizes capital flows across cycles. In an expansive cycle, yields drop and stocks perform well. In a restrictive cycle, yields spike and capital moves towards safer assets, often causing corrections in the equity market. Auction market theory suggests markets continuously seek fair value. The value area is where most volume occurs. Markets alternate between balance, consolidation within the value area, and imbalance, where violent price discovery occurs outside of it. A failed auction happens when price dips below established value and then closes back inside, signaling a liquidity sweep. When this occurs, look to go long and target the top of the value area. The initiative breakout is driven by macroeconomic shifts. Rather than buying the initial vertical move, have the discipline to wait for an algorithmic retest of the value area high before surfing the new drift. The swing surfing operating system has 3 steps. Map the macro flow to find your bias, use the volume profile to find fair value areas on daily charts, and execute anomalies like failed auctions or initiative breakouts. Stop trading the noise. Remember, the algorithms are predictable and capital flow is mathematical. Your final directive is to map the volume, track macro yields, and execute. Thank you for joining this session.
All the surfers that were worried that hold on. All the surfers that were worried that surfing was going to be boring, huh? Surfing is actually the main category of where money's made, y'all. Day trading is meant to supplement, right? Long-term asset holding is meant to carry your wealth into the future. But swing trading, that's where the bag is made. Right? Those are the trades that you'll take through one Bitcoin cycle. It might be, we're talking about legacy mostly right now, right? Because that's where a lot of the swing trading opportunities are. It's the same for crypto. It's just about trading narratives, right? Getting in on a narrative early, like when we got in on AI narrative on Christmas, day 1 of the AI narrative. That money that's coming in can't come in all at once. The reason that we're talking about legacy is because it matters more on legacy because of the institutional players. But with the institutions that are in crypto, it's similar, right? Once that money starts to come in, you know that they can't put it all at once. So we ride that wave or we ride that drift, right? There's 3 different currents in my opinion. There's drift that happens on every time frame. All it means is big orders come in, they haven't finished coming in, they're stacking iceberg orders. There's amount of drift to the top side that you're going to get there until all those orders are filled. Then you have runs, right? Like a bull run or a bear run, which could be inside of a bull market or a bear market, which always confuses people. Like these relief rallies that we've had have been bull runs, but in a bear market, right? It doesn't make it a bull market. So, and then you have your actual markets, right? Your bull market, bear market, your longer swings. But honestly, a lot of the money is made in the middle. I'm going to give you guys the next subchapter, and the rest and the details and digging in are going to happen in class. It's just a little sneak peek to what we do in Cypher School, that's all. Yeah, let's give price a second to come down if it goes to CME. And then if we range out after grabbing this, like I think we are, we'll move into the next section. It's not difficult, y'all. It really isn't, right? If you've been able to hold the concept of market maker and his needs and wants and him having to rebalance his portfolio and all of that, this just takes it to the next level, right? Where you're including central banks, you're including major hedge funds. But once you can hold the concept for one, it'll carry over, which is why I'm sort of doing it in this order. This is for more of the fundamental traders, right? People think, oh, I'm not good at TA. Cool. Can you do research? Because it's not just about technical analysis, right? If you get really good at fundamental analysis, then you get to see these waves before they come. Right? And what's good about being in a group like this is if you're good at fundamental analysis and you're not great at technical analysis, well, you've got people you can lean on. Right? And if you're not good at, fundamental analysis, but you're good at technical analysis, then there's resources that you can lean on for that too. But Warren Buffett couldn't sit here and look at this chart and tell you what's going to happen in the next 5 minutes. But he'll tell you where to put your money for the next 10 years. You know? I wish I knew. My suspicion is that they've had a sit down. This is just my suspicion. Michael Saylor didn't give any kickback to BlackRock coming in, like at all. That was always suspicious to me. And another thing that I thought was interesting. So basically, that's like an open door, right? It's like BlackRock's getting ETF. Everybody looks at Michael Saylor. Michael Saylor has nothing bad to say. All right, I guess it's cool then. Right? But then look at what happened when JP Morgan went after Michael Saylor's index standing. When they came in and they said any fund or any business that has over 50% of their net worth in one asset should be considered a fund and not included in any index. Right? A lot of people don't realize what that was. That was like the most exciting part of this action movie, and most people missed it. If they would have been successful, Michael Saylor would have been removed from the index. MicroStrategy would have been removed from the index. If MicroStrategy is removed from the index, they lose institutional lending. which means that that 5-year loan that he has at 1% would be gone, which means that he's one bad bear market away from having to sell his Bitcoin, right? Or even worse, to protect the company, which I don't think he would have done this, but to protect the company and stay in the index, he would have had to sell half his Bitcoin, right? Or any other treasury company that wanted to be included in the index would have had to sell half their Bitcoin. That story disappeared. Nobody noticed how that story just went away. I can almost promise you that that red phone rang and Larry was on the other side of the line saying, "What do you think you're doing?" Like, I don't know if you've noticed, but we've got a massive Bitcoin ETF fund here. And the games you're playing with Michael Saylor are going to affect my pocket. So I'm going to need you to relax. That same phone call that he made to, yeah, let me tell you how crazy it is that I can't even remember his name right now. I also believe it's the same phone call he made when Trump started talking about auditing the gold in Fort Knox. In the middle of a Bitcoin ETF launch. So, anyways, those two things make me think that Michael Saylor and BlackRock have some sort of agreement. Another thing that was interesting is that they asked Michael Saylor about absorbing Bitcoin treasury companies that were failing. And Michael Saylor said, MicroStrategy is not interested in doing that, but I do think it's a viable alternative for other funds. So I'm thinking, well, that doesn't make a lot of sense. Why would you take that off the table? Just think about it. We have, hold on, I'll pull it up on another screen so it's not, like, just follow me down this rabbit hole for a second. So we have all these Bitcoin treasury companies, right? And people think it's just like Saylor and a couple others. Like, no, like there are hundreds of Bitcoin treasury companies now. Right? The difference is that 99% of these are going to fail. What they did is they saw Michael Saylor bring back MicroStrategy from a dead company and turn it into one it is now by just holding Bitcoin. So everybody's trying there. I mean, look, some of these Bitcoin treasury companies have 6 Bitcoin, 3 Bitcoin. My point is, some of these middle ones, right? Figma Incorporated doesn't have the same shareholders that MicroStrategy has. They're not used to bear markets, right? Figma Incorporated also doesn't have Michael Saylor as the CEO that can explain to the shareholders in a way that they can understand why their stock price is going down and why it shouldn't matter to them. So these shareholders are going to put pressure on the board to make the CEO of Figma sell his share or sell the Bitcoin. At that point, when that pressure is at its highest, Michael Saylor, BlackRock knocks on the door. Hey, I hear you guys are having some trouble. We're going to pick up a controlling share of your company at the low prices that it is right now. And we're going to sell you off into pieces. And then we're going to pick up your 767 Bitcoin, pennies on the dollar. We're going to add it to our bunch. We're going to do that over and over and over and over. These large treasury companies will slowly absorb all of these smaller ones. Right? So they're basically buying the company, but what they're really buying is the underlying asset underneath net asset value. Right? So it's almost like you bought Bitcoin at a discount and then you got all this other shit you can sell off, like real estate or whatever else the company owned. Now, MicroStrategy came out and said they're not interested in doing that at all. He said it's a good idea for everybody else, but they're not interested. When I heard that, that told me that he's giving it up to BlackRock. For some reason, I think there's a deal made behind the scenes that MicroStrategy will be allowed to continue to do what they're doing and take over the planet when it comes to Bitcoin, as long as BlackRock is allowed to absorb all the treasury companies when they go down.
I just double checked it. BlackRock is one of the largest holders of MicroStrategy.
Yeah, they own everything.
They own everything.
They
on the
own
500.
everything, which is why that phone call, I think, came in hot and heavy too. Like, what do you think you're doing?
Yeah. But I think BlackRock was on the side with Saylor. And again, who knows what happens there long term. But
yeah, I definitely think they came to a tacit agreement. Not one that was, I'm sure there was some arm twisting, you know. But that's what you can do when you own. That's why they own everything, bro. Because when they go into negotiations, they don't just go with like ideas. They're like, bro, we own X% of your company. And that's how they start. And then they go into negotiation. SpaceX has more BTC than Tesla too. And when my future trip plays out and SpaceX absorbs Tesla, they're going to be number 5 Bitcoin treasury company. Well, that's what I'm saying, Philip. That's why I think that the agreement was made. Because that is the risk, right? The risk is that BlackRock does something to affect the price of Bitcoin, which then affects MicroStrategy shares. And then they pick up the rest of the remaining shares that give them total control, which gives them the, control of the Bitcoin, and then they reverse the market. But I think that a bigger money deal was made than that, which is, we'll mind our business. We're not going to use all this Bitcoin to try to absorb everything around us like you guys do. That's your game. You can have the rest of the world. We just want the Bitcoin that we can buy on our own. Like, we got a strategy that's working. We're just going to do this. And that just means that BlackRock doesn't have any real competition when it comes to absorbing some of these smaller companies now. They can muscle it because it's big bank, takes little bank. Michael Saylor's in the lead. So this also gives BlackRock the opportunity to eventually catch up and pass, which they will sustain the pass, right? Because they'll be able to access. They don't have to worry about what the price of Bitcoin is. They just have to worry about what price they're picking up the companies that own the Bitcoin. And the whole thing is a Bitcoin accumulation strategy, like I've said from the beginning. BlackRock's biggest problem, their number one problem, is that they have too much money. It's probably their only problem. That same shit that we have where we're trying to keep our dollar from debasing, imagine having BlackRock's bag. So their problem is that they constantly have to rotate, right, to keep from debasement. So instead, what they're doing now is they've got this big ass bag of fiat, right? More money than they know what to do with. And they started with this tiny little bag of Bitcoin because they spent too much time talking shit. Remember when Larry said that Bitcoin was the index of money laundering? It's like the S&P of money laundering. Mind you, they were picking up Bitcoin at that time. But that's their Bitcoin bag, right? And then this is retail. So they spend the whole time telling retail, look, Bitcoin dangerous. You can lose your shit and get stolen, blah, 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 blah. We'll give you an ETF. You don't have to worry about your keys. We'll track it. We're the masters of the universe. You can trust us. Right? So They're like, all right, I want the ETF. So BlackRock has to buy Bitcoin for every ETF, right? Value they have to hold. CC rules. But they can settle in cash. So retail gives them money. They take that money, they buy Bitcoin. This Bitcoin gets bigger. Right? Their Bitcoin stash gets bigger. When retail wants to cash out, BlackRock doesn't sell this Bitcoin. Right? They have the fund Bitcoin that's separate. And then the money from the fund Bitcoin goes back to them. But the Bitcoin that was purchased to cover that stays in the coffers. So what happens over time as they're cashing people out is that big bag of fiat that they have gets nice and small. And that big bag of Bitcoin that they don't have to worry about being debased gets bigger than anybody else's. Rinse and repeat. That's like when Elon was selling Teslas. When he was taking Bitcoin for Tesla. They're like, oh, Elon's trying to, help Bitcoin by da 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 da. Like, Elon is buying your Bitcoin at the price that it costs him to make a Tesla. That's what Elon's doing. Elon's accumulating Bitcoin at the production cost of a Tesla while you're paying for it at a full cost. So he's basically buying Bitcoin at pennies on the dollar with metal and plastic. Brilliant if you could do it. Brilliant strategy for anybody, yo. If you think of it that way and you run a business, accepting Bitcoin is a no-brainer, depending on what your cost of production is. Global liquidity is in charge of the control. I mean, you can't change it without changing the global liquidity cycle. And more than global liquidity, it's risk, right? Because global liquidity was still going up. We saw global liquidity go into S&P. We saw it go into gold. But Bitcoin seems to have a very tight risk cycle. If you guys were here a couple years ago, me and Zeus used to talk about when the real estate cycle would top out. Real estate cycle was always meant to top out 6 months after Bitcoin topped out. Right. My argument was when we were talking about it was that if I was a master of the universe and I could keep the cycles going by just pumping money as much as I could, I would try to pump legacy all the way till when real estate crashed. Right. I don't want legacy topping out when Bitcoin tops out and then 6 months. And then I want to keep that party going for as long as possible. And it seems like that's what they did. The war had a lot to do with it. AI obviously had a lot to do with it. But they pushed the legacy's top closer to the real estate top. So you can make an argument that legacy is on a right translated cycle. Right, meaning that their top has been right translated, not a super cycle. A super cycle would mean that they don't have a bear market at all and they just go for the next 4 years from this point. But a right translated cycle means that they top out later than is expected. Yeah, they could. That was the big concern. When BlackRock first got in, one of the big worries was, are they going to play the game with us, or are they going to try to run shit? And in my opinion, in the beginning, they tried to run shit. And I can sort of prove it to you. So the way that this was walked up, right, was kind of sick. We had a very clean swing to play, right? It went from pump, consolidation, liquidity sweep, pump, bull flag. That was the fractal. Pump, consolidation, liquidity sweep, pump, bull flag, right? Then again, pump, consolidation, liquidity sweep, pump, bull flag. We kept fractaling the same thing. Pump, consolidation, liquidity sweep, pump, bull flag. Because of that, we always knew that the bull flag, hold on, I have to put this up. From the time that we started this run, we knew that, well, my thesis was that we would have a blow off top or bull flag that fails, right? This is where we should have had our blow off. Right? This bull flag would have played out, which it looked like it wanted to right here. You know, right as we topped on the 6 was a break out of that bull flag. It ripped it. So we ended up getting the bull flag that fails. But my point about the institutions was the way that these markets usually run, there's a couple of things that happen from cycle to cycle that don't break. Right? One of them is you don't break all-time high until after the halving. Right? This is the halving. Typically, you don't break all-time high until after the halving, months after the halving. And your secondary scare, right? When you come down and you have your first sort of retest, like this candle came down, right? Bam. This was our first dead cat bounce. When you hit that dead cat bounce, you have what they call a secondary scare. So the market starts, bulls run it for months. Then you get to that dead cat bounce and you get a secondary scare, which then leads to the break of your all-time highs. Well, what happened here was ETFs got accepted. And when the ETFs got accepted, hedge funds and traders thought that they could break this cycle, right? They didn't respect the fact that you're at your dead cat bounce, which is right here, which should have been where we had our secondary scare that would have brought price back down to these levels. Then we would have broken all-time high, right, after the halving. So that's when that's the first time that I noticed that institutions got ahead of their skis. Well, what happened? We got above all-time high, but we only had one daily close above, or one open, one close, right? And they got knocked down. So in my opinion, what happened here is that market maker, old Bitcoin whales, slapped the shit out of institutions. So we don't know who you think you are, but this market you can't push around with money. We run by cycles. And the way that I can sort of prove it is look at how long we consolidated. This is the longest consolidation in Bitcoin history. But look at where we went down to before we took back off. They brought them all the way back down to that dead cat bounce. It's almost like when your dog pees and you put his face in it so he knows what he did. This, in my opinion, was the market putting institutions' face in it. This is what you did. This is what you had to pay for doing it. Just to make sure you know what you did. Now calm the hell down so we can have the rest of the cycle. Everything after that played the same, right? Except for our blow off top. But after that, we didn't see any counter cycle movements from BlackRock or VanEck. Right? They sold off at leads, they sold off at the top, They didn't try to buy back the dip and stop the bear market. All of these things were questions before. Like, we didn't know how it was going to play out. But in my opinion, and again, no way to prove it, right? But in my opinion, all of that happened right here. And this is where BlackRock learned that they could kill the golden goose if they're not careful. Why watch something for 10 years before you get into it? Map out the entire cycle, do all the math to see how much money you could make by playing this game, and then come in and change it. I think people are kind of paranoid, and they think that BlackRock wakes up every day and tries to think of a way so that you can't make money. They are not even thinking about you. I promise you that. Unless you're one of their customers, they're just trying to make money. And if this is the best way to make money and they have more money than you and they can play the same game we're playing but still make more money than you, then there's no reason to kill your game. You're never going to catch up. You're not a threat to BlackRock. Michael Saylor, right? Since he had a lead, is a different story. And that's how we started this conversation with, is there any chance that there was any deals made between Michael Saylor and BlackRock and them? You know what the thing is? I do trust them. But the reason I trust them is because I only trust them to do what's in their best interest. And I think as long as you trust institutions to do what's best for their bottom line, right? Like if you take greed into consideration, then they're always going to err on the side of greed. Now, you can't trust them to do the right thing by you or your family. But once you know what type of time somebody's on, they're almost more trustworthy than your friends. You know, because if someone's going to be consistently a dick, then you can just trust them to be a dick every time you see them. There's a piece that comes with that. Now, I know I could just avoid you, you know. The strategic reserve is open. You can see how much is in there. I mean, we haven't bought any, right? This is all seized Bitcoin. Yeah, the weekly close should be interesting. If it closes on bodies, that's a pretty strong sign of support. If it doesn't, then you've got your structure break. There's really nothing underneath but wicks. We were talking about this the other day, that you've only got a couple of lines to come down to, and they're not strong supports. You got the wick support that we double bottomed off of here. And then underneath it, you've got your 52, which is where I think we're going, right? I think our next sweep takes us down to low to mid 50s. I think we consolidate there for a while. And then that bottom wick is 48, which is my base case. And then 38 down here, which is as low as I'm willing to go. So it's literally 3 wicks. 3 times where the market found buys, significant buys, right? That reverse price. Neighbors is there some reason I should hear, oh, okay. I know what he's doing, forget it. Neve. Yeah. Well, we closed CME gap that doesn't exist. W troll from market maker. Right as Asian shift starts. I'm expecting vector recovery from the Asian session. Asian shift start. You know what that means? My bad. That's just too good. Like, I legit want to watch the movie. Like, I trolled myself by making an intro to a movie that doesn't exist. I had time, Jamal. I had time that day. I don't know, bro. I did. Like, sometimes I don't even bother. I just want to bear witness to their ignorance sometimes. It doesn't, they don't tend to misspell when they're running off of a report. But when they go out and try to add information, it's something about the image generation that just is still wonky. That's why I like to work off of my own sources. It cuts down so much of that hallucination shit. Not I said the fly. I mean, I do think they go grab that vector. I just don't think there's a lot of meat on that bone. Yeah, that's right in my target range, Indy. 5's a little low, but 650 to like 750 was what I was looking at. Vector recovery puts us at 636, so $300, $200. You guys got to remember that pre-market, well, it's not even pre-market, but pre-market maker coming in is the last opportunity for any big money to move against the algo. It would be funny as hell if they send this shit to 80 after that intro, though. Yeah. As soon as we settle back down here, I'll play the next part of that chapter. I'm back, my bad. Vector recovery is almost done. Agent session hasn't started officially yet. That little intro's hitting different right now, huh? Come on, you see how he kicked that door open to the Asian session, bro? He wasn't playing. Vector recovered. Nice, Latitude. Welcome, brother. Yeah, some of y'all been in YouTube for the longest, man. Some of y'all family before you even join. Just got to make it official. That was classic. Pose of CME gap, mean reversion before the Asian session. Well, classic except for the fact that CME gaps don't exist anymore. But other than that, you know, textbook. What you hear is this, Hoover. She's just tuning up in the background, getting her vocal cords ready. It was a bit of a stretch to say that CME gaps would still be respected after the close, but it's starting to shape out that way at least. We invalidated so many measured moves. I mean, so many traps to the top side that it honestly is a little hard to judge it. My instinct tells me we've already got false move up, which was here. The reason that I say that is because this move wasn't a trap. Right? This move freed the trap, but unlike every other new trap, right, that had bigger volume than the one before, this didn't. So personally, I'm playing this as one of those weekend traps where we have a false move up, then we come back and close CME and then finish the false move up. But it's still too early to call it. It's not textbook, so it's, you know, it's just an instinct right now. But with the weakness I'm looking at, it seems like a tall order. Let's see, a new high would take us, I mean, the psych high is still there, so you assume that we're going to revisit psych high at some point during the week. Yeah, I just don't think it's going to be an explosive false move up. Right, came up, false move up, cleared CME, put in another high at some point. we haven't really rejected off a 6-5 the way I would want to. Right, a nice hard rejection off that psychological 65K area would be pretty decisive. Asian session is about to start officially in a couple minutes. Well, that's really why I want to get into the next part of that chapter. It's kind of timely because that's what we're talking about. What's going on, Kelly? Nah, our Asian shift here starts half an hour before Asian session and runs half an hour into Asian session. It's like the pre-game, basically. It's more traders than market makers. The start of the Asian shift. Oh, the indicator's out in TradingView. Just type in the Cypher. You should find it. We added a little box just to let you know the Asian session's about to start. It's like a half an hour warning. But yeah, the opening and the 5-minute candle. That's what gives you the box. We should see it click in here in a second. I want to test to see if it happens right on time in 4 minutes. That's just volume. It's your regular volume. I just put it to gray and made it transparent. Yeah, I know, right? Old habits die hard. Don't forget, y'all, the new I guess I have to. I didn't make a. Did I make a Discord post with the sizing indicator yet or no?
China.
All right. I know I gave it to Cypher School too. I need to drop it in the I need to drop it in the general. So last final is yeah. Our sizing calculator is done. All right, anybody that hasn't seen it yet, actually, it's a good time. Let's look at this trade. Let's say, for shits and giggles, right? Let's say you got in at 627. ATR is 125. Put your stop loss at like 6314. Let's say you're shooting for psych high. Right, so you come in, assuming you got $10,000 account, you can put whatever you want on there, risk whatever you want on there. It's on y'all. 6327. 63270. Your stop loss is at 63148. And you're trying to screw it. Let's go 50% of the vector. Oh, what I want. 64884. Putting in the reward for putting in your take profit is that it opens the bottom side of the indicator, which I'll show you in a second. Right, so now you scroll down and it lets you know what your position size is. Super tight stop, obviously, which means your position size, your allowable size is way higher. But your spot position, right? Your account only covers 19% of this position. This is the proper time to use leverage. You'd need 5.2x to size correctly, right? So if you were to go to futures, and this is only if you're planning on using, there's times where you're not going to have your full allowable size in a trade, right? But that's to each their own. So then when you open up the leverage, lets you look, put in what your funding rates are, your fee rate and your funding rate structure. Lets you know what the position size is, your gross P&L at target, 1 to 13 risk reward, funding cost, liquidation price, break even price, which is important. A lot of people don't know where their break even price is because of fees. Right? And then you get to your profit per hour. Right? So down here, well, then you need to get faster. The answer isn't getting in without knowing what you're proper sizing in for speed. Speed isn't going to do you any good if you're not properly sized and protected. Yeah. It's not hard at all. What's your entry? What's your stop loss? And what's your take profit? You should know that before you press go. That's what this forces you to do. If you don't know what your take profit is, then it'll still tell you what your allowable trade size is. Right? Those two things should 1000%. You obviously need to know where your entry price is, and you need to know where your stop loss is. If you don't know where your stop loss is, then it's impossible to give you what your proper sizing is. No math in the world can tell you that. Right? So let's go back. What was it? Stop was at 63136. Yeah, you should have your targets. You should know where you want your entry to be, right? Roughly. But if this is up on your, on a side screen and you have it easy to get to. And I mean, it's also good to check trades that are already active, right? This trade's been going on for how long? Let me show you. Your take profit is at 64876. So let's say you're trying to judge something that's going on a current trade, right? You come down and you look and you're like, all right, I've been in this trade for this. Again, you can't get this without this information. You need to know how long you've been in a trade, what your risk is. This is all like crucial shit. So you've been in the trade for 45 minutes. Right? So you come here and you say, I've been in this trade for 45 minutes. Right? But the profit override because you haven't gotten to your profit. Right? So you would put how in profit you are right now. So let's say right now you're, $300 in profit. Well, that tells you that you're currently running a $400 an hour trade. Some people might, like, let's say you were at your take profit, right? Or let's say some big orders come in and you start to see some weakness or whatever, and you're thinking about exiting your trade, right? Exiting this trade at the current moment would be a $400 trade, a $400 an hour trade, right? And then down here, it lets you know what that equals to profession wise. You can also come in here and say, I make $25 an hour at my normal job. Well, your current trade is at 16x your normal pay. The point of this is to make you respect the profits that you're already in and protect them. Right? This isn't meant to make you, oh shit, I'm gonna get out of here. It's meant to make you the next time that there's a place that you can move your stop loss and you can lock in that hourly rate. Right? And then at the bottom, it lets you know, okay, if you take 3 of these trades, if you were to exit the trade right now and you were to take 3 of these trades per week, you'd be pulling in 3.9 a month, 46K a year. It'd take you 2.2 years to get to 1 Bitcoin. Yeah, I made this call. It's like the profit per hour thing that I had in the Discord for the longest, but it was just like text. And I think a lot of people were like glazing over it, basically. And then let's say that you are at target. Right? Let's just assume this trade is already played out and you're at 6490. Right? Let's say it had played out already, or let's say it plays out and you've been in the trade for 2 hours or an hour, whatever. Right? That's $1,000 an hour that you just made on that trade. Now, let's say you start to feel FOMO because price is still going and, well, what happens, right? There's trader A that takes profit when he's supposed to, and there's trader B that holds on to more. So what happens if it goes down 10%, right? Or this way, exactly. Look at what happens to your profit per hour if you lose 10% on that trade for waiting, or 25%, or 40%. Sorry, I was doing it backwards. 10%, 5%, 20%, whatever, 50%, 60%. At this point, you're round tripping. Problem is that it gets worse than round tripping, because if you round trip and you go negative, then now you've got overtime hours. It's even worse than your pay. Like now you've literally got to work overtime just to get back to what your regular pay would be. It's just a way to sort of look at profits different. and understand why it's important to use the proper sizing and to use the proper risk. Nah, they shouldn't be scared. They should just be aware. Excuse me. Yeah, and there's, like I said, there's not a lot of fill in. As long as you fill in all three, everything opens up for you, right? The reason that I did that is because I was trying to I'm trying to incentivize people to know where they're going to take profits before they get in a trade, or at least have an idea, right? Without that take profit, none of this opens up. Because without the take profit, there are no profits. There's no way to calculate what your profit per hour is, or how, because you're just shooting, you're pissing into the wind, basically hoping for more. Yeah, we went over that. I think it was like chapter 3 or chapter 4. But going in order is probably, I think, I mean, I don't know. You can ask somebody that's done it, but going in order, I think, is the best way. All right, market makers are on duty now. Bro, did you not see the intro to the market maker session? They weren't playing. Don't make me play it again.
Yo, I got a quick question.
Yeah.
I'm moving around some.
Some mic cords.
Say what?
All I heard was I'm moving around, and then you died out.
Oh, I'm moving some funds around.
Yeah, your mic's chopping up. Like after 2 words, it cuts off.
Is this better?
You have to keep talking so I can know.
I was just wondering on US.
It did it again. It did it again. Try leaving the Discord and coming back.
I 1 sec.
All right.
Is this better?
Keep talking.
On USDT, what's the best network to move around in?
I usually use XLM. The cheapest anyways.
XLM's the cheapest.
I think so, yeah. Fastest. I mean, unless something's come up since then, but it's always been so cheap that I never even think about. If it's a large amount, I just sort of send XLM.
Gotcha, appreciate that.
Mm-hmm. I've been looking at it on my own, but nobody's really interested, Cal. People don't care. Like, oh, cool, UFOs. But yeah, I've been looking at it on my own. Pretty interesting stuff. Give me 1 second. Someone's knocking on my door. I'll be right back. back. Amazon Prime Day tomorrow. Need something, might as well get it cheap. Give me 1 second. All right, y'all. I just dropped the sizing calculator in Discord. Forgot to tag everybody. Hold on. Pretty much gone sideways since agent session kicked in, except for that first little move. That's good. If we go sideways, we'll be able to finish part 2 of chapter 9. Got 2 more pieces of content I want you guys to see. Again, we're gonna do all of this in class on Thursday. So, well, actually, we'll have to see. I want to see if people want to just skip class or do it at an earlier time this week, since we skipped Let's Day. Asian session wasn't playing, huh? Big buys, big buys. All right, so I put out the post for the sizing calculator on Discord, y'all. You just gotta hit those 3 buttons at the bottom of the code, the 3 dots, and then download, put it somewhere. You won't lose it on your PC. All right, well, here's that retest. Excuse me. Getting up to that high volume node. Cleared that volume gap. Asian session isn't known for trending. So at some point here, they're going to find the top of their range. Shouldn't the VPN shouldn't stop it? No, it's just a HTML file. So if you just click those dots and download, you should just be able to double click the file and it opens right up. What's going on, Ghost? It never gets old. The funny thing is, we played that down here before they went nuts. So that's an Easter egg, Jamal. You and Neve been the only 2 that found it so far. A psych high is at 645, but 50% of the vector is what I've been kind of looking for this whole time. That gives us 50% of this vector on the 4-hour. That one right there. That also gives us a retest of the large bear flag that we broke. Wow, that is a nice 4-hour candle, and it's not even a vector. Ghost candle. Nice volume. Our trade that we took on the sizing calculator is looking really nice right now. How much time have we been in the trade now? Let's see. Or how long has the trade been active, I should say. When we took it. On this candle, hour 35 minutes. 1 hour. So you're running a $315 hour clip right now. Oh wait, let's get rid of that. Yep. That's $1,000 an hour trade all day. Do that every day. You'll have a full Bitcoin in 2 months before we bottom. Now, obviously, not every trade is going to be as fast as this. The speed is what gives it that per hour. Asian session is showing off. Anything more than 2% on Asian session is an anomaly. We're getting there. 2% is about here. That's their average range. Come on, you're already there. Clear that vector. That's like easy work. And then come back and clear the vectors that you just left. Do I need to play the video again? Like every time I play it, it pumps. I don't know anybody that's pressing buy or sell off of negotiation news anymore, bro. But I'll take it. I hope nobody here is pressing buy or sell off of negotiation news. Because there's a 60-day deadline. Well, now it's probably like 55 days. That's an eternity, bro. For everybody to act right and not do anything stupid. Come on, one more move up. 50. Well, the 5 is there. Hold on. Sell walls above 200 Bitcoin, 280 Bitcoin. Absorbing that right now. Going up through the rest of those sell walls gives us that 50% vector refill. And then that is where I will be moving my stops way into profit. Excuse me. From an older trade, not now. This is just a culmination of like a 4-day trade already. It's just not gonna stop, bro. Unfortunately, there's too much there's too many motivations to keep this thing going. And we have the least to benefit from it, which is why I still stand by that we're gonna walk away from this thing, declare victory, and it's gonna continue without us. Come on, don't get to spoofing now. Let's get it. By the way, the measured move that we're on right now is this one. It's not completely played out, but this is the one that I said I'm not 1000% sure that it plays, because we do have the larger one, right, that would take us if everything goes beautifully. But what we're working on right now is our first fractal here. But we were targeting that 50 EMA regardless. The question is, does it continue? This SR flip is the issue. If you can get above that and hold, then our previous idea of a larger W playing out, right, would still be in the cards. But baby steps, one thing at a time. What you want to see is that your bulls are staying underneath the 50 EMA with liquidations. Where everything can't be a scam, how Duff? It starts to lose its meaning after a while. I don't know, bro. My advice is don't overcomplicate something that's already complicated. Losing at 50. Bro, you can feel free to do whatever it is that you've been doing, brother. I don't think anybody here is going to stop you. Candles don't mean shit, but every green candle sends him on tilt. So far within Asia's normal range. Like literally nobody's celebrating. That's what I'm saying, bro. People overcomplicate this shit. And stop adding narratives that don't need to be there. This is already difficult enough. And, 3 to 4 orders deep in thinking enough to where you don't need to add fantasy stuff that doesn't exist. Just making your own job harder. All right, let's see. Lower high, or do I get my 50% of that vector? What information, Thomas? I didn't see your initial question. Let me see. Yeah, I got you. It's in there. I mean, you can see it on the Discord too, but if you take a couple screenshots or whatever, just take a look. I'll scroll for you. And then the small orders at the bottom.
This smells so good.
I don't think anybody's blocked you, Kaloy. That's the first thing I've seen you write, though, in a long time. I'm scrolling up. Unless it's the live chat that's blocking shit. Make sure you guys are on live chat instead of top chat. Top chat will block stuff sometimes. Yeah, we're really close to the retest of that flag. It's right here. Oh, that's the wrong one. It's this one. And that's the large bear flag that we dropped out of. Nah, it would be, I mean, at this pace, yeah, 65, 65 too. I don't think we get over 65 personally. Has a higher chance of invalidating, but this gives you that 50 EMA. I mean that 50% of the vector hit. If I'm not mistaken. It's got to hold the 50. If price holds the 50 here, we'll get that 50% retracement, and then I will get move my stops up. That used to be a line where CME, where price came down to close the gap that was left for CME, but in the last month and a half now, guys, CME is 24/7. So there shouldn't be a reason for price to keep going there. Yeah, it continues to do it. So we just call it the ghost of CME. It's basically where the old CME line would have been. Yeah, no problem. You know, we're on the 15-second, but you guys are seeing the same structure build that's building on the daily, right? The W on the daily and then the type 2. And then trying to see if that type 2 on the type 2 on the daily holds so that it'll play out. It's the same structure as the 15-second. Same structures you're going to see on every time frame. Damn, I posted that question when we broke the 50 right here, and it took that long to. Well, now of course everybody's gonna say please. It was an easy one now. It's trying to get that one off down here, but we'll see. We're not at a hot water yet. Market makers making it exciting. Yeah, grab what you need. It's on the table over there. Let me know if my background gets too loud, Joe. I got people over. I just don't see my mic firing. Let's add a little intrigue. Holding point of control. The funniest shit is watching the poll go up and down live with the candles. Y'all are, y'all are killing me right now. Because it's like the number of votes isn't going up, but the yes and no is going up and down. I mean, okay, there we go. We're getting some more votes in now. I'm not gonna lie, and if you feel triggered, I'm not talking about you, but that's how some of y'all trade. Some of y'all watch the chart. That's exactly how you trade. I'm in. No, I'm out. I'm out. I'm out. No, no, hold on. Nope, I'm in. That's how people trade up and downs on Poly Market. I'm seeing a lot of effort from whales with very small effect, which isn't good. It means that these there's sell orders above us. Yep. That are absorbing. Right. Effort versus effect is important. If you're watching a tape and you notice that 10 Bitcoin sell drops the price, but a 50 Bitcoin buy doesn't push price, it lets you know that the book is weak to the downside. And you're getting absorption. Nah, I haven't added new money to this trade for a while. This is all old trade, and I've just been running my stops up. I'm watching the poll to see how many plays outs jump ship. I wish I had names attached. That'd be great. That'd be the funniest shit if you could see people's names. I saw that. Keep that same energy. No. Stay over there. You stay right where you are. I'm talking shit. This could 1000% roll over. Like, we're on the 15-second, yeah. This is just for sport right now. The only dog I have in this race is that I want that 50% effect to fill. But really though, I know we're just playing around, but that anxiety that you feel, and this is just a poll where you're like, if you're switching back and forth trying to get on the right side of it, and then the red candle, and then the people trade under that type of pressure, bro. Like, they legit, that's how they trade. In a poll, it's fun. You could do it. It doesn't mean shit. But to like risk your, future child's tuition. M pattern. Measured move takes you to that invalidation. So now you see the bears trying to, remember I told you about the invites, right? Whales and market makers set out party invites. You can look at these patterns as an invite, right? This is a bearish invite to join the bear team. Whether retail buys it, right, or joins the party is a different story. But you see the invitation to the bull party, and now you see the invitation to the bear party. Volume lets you know who's pulling up. We checked to see if this could be a fractal. This is a golden pocket hit. Then you're fractaling a larger W. It is. That's what it is, bro. They're chasing a dragon. Watching all of this on the 15-second, just so we're clear, all you're doing is watching these 5-minute candles build. Right? Instead of sitting here on the 5-minute candle looking for weakness or strength or right. There is an edge that comes to watching the fight live and not just seeing the effect, the after effect. Right? Like you can see a steady attempt here from bulls to keep price. So what does that mean? Right? If they keep pushing up here with those big ass buys and can't and keep getting knocked down, then eventually bulls are going to capitulate to the idea of price going lower. Right? Which would lead to a bigger drop than just a normal sell off or a normal liquidity sweep if it did happen. All that information is lost on the 5-minute. Not even the 5. All that information is lost on the 1-minute. Not really. 1 minute, you could still see it. You can see the attempts. You can see how it's selling off. But you get what I mean. There are details that are there that you can make decisions based off of. It's not that you're choosing your entries on the 15-second, right? It's that you're managing an existing trade, a decision that you're making on an existing trade on a lower time frame. There's a million tools. The reason that I don't worry about tools is because what they can't do is decide when to use themselves. What AI is not good at is being able to judge sentiment yet. What it is really good at is taking a strategy that you have and implementing it with no emotions, right? Over and over and over and over. So if you find that your choke point is you, right? If you find that your strategy is strong, but you keep making, emotional decisions, then getting a system to apply your strategy with no emotions is probably a decent idea, I think the reason that grid bots do so well is because that's one of the most emotionally taxing things for people to do. To buy within a grid, to just systematically buy within a grid and not try to think too much. Right? You always talk yourself in or out of certain buys, or you miss certain buys because this candle looks like this or that, where a grid bot is just going to execute. But I don't like bots for trading. I tried it for a while. It takes the fun out of it. If I lose the fun in trading, then it's a wrap. If this becomes a job, So that M pattern is still threatening to play out. We haven't invalidated. We'd have to get above 646 to invalidate. Bots are going to be as successful as your strategy, right? If you just go on an exchange and just use their predetermined grid bots, I mean, they're going to do what they say, right? If you say, I want to buy Bitcoin between 40 and 50, and you set a grid bot, then that grid bot is going to buy between 40 and 50, right? An accumulation bot, a DCA bot. If you have a grid bot where you say, I want to buy at 40 and I want to sell at 60, then every time it goes to 40, it'll buy. Every time it goes to 60, it'll sell. Now, if those are the right areas, that's a whole different story. All a bot is going to do is do what you would do faster. So if you would lose money, it's going to lose money faster. If you would make money, then hopefully it'll make money faster. Just like anything, it's knowing when to use a certain tool. Does this look familiar to y'all? What we're doing right now, by the way? Just want to show y'all that these things fractal even on 15-second time frames. W pattern right here, right? What were we doing when we came down? Trying to see if that type 2 would hit. We had a drop. Then we were looking to see if the type 2 on the small W would hold, so that we could have that give us the measured move that took us to the top of the complete W, right? The same thing we're doing right now. This is the W in question. We came down to the type 2. We're trying to see if this type 2 holds, so we're looking for a type 2 on the type 2. So we're looking for volume to pick up. If it picks up, then this small W gives us the measured move that plays out our larger W. If it invalidates, then we just caught the top on a 15-second instead of having to wait on the 15-minute. If it fractals the way it did last time, then we get to TP 50% of the vector. Yeah, I mean, DCA bots are effective, bro. Like I said, DCAing is one of the hardest things for people to do, because there's going to be days where you're DCAing up. There's going to be days where you're DCAing down. But the whole point is that you're dollar cost averaging in a certain range. So I have, remember I told you about Cash App. Cash App is not sponsoring this channel. They should be. Actually, I do have a little Cash App logo right there, although it's not a sponsor. It's just my Cash App. But Cash App fees on Bitcoin are really good. But there's a trick. You can't just go on Cash App and buy Bitcoin. You've got to set reoccurring buys. So the way Jack set it up, he said he wanted to encourage reoccurring buys and accumulating Bitcoin and not just buying and selling. So, like, let's say if you got 10K, 20K, whatever you have that you want to put into Bitcoin, if you just set it up as reoccurring buys, even if you have to do it like every day, I can't remember what the smallest, I think the smallest increment might be intraday, but I don't know. But I know you can set it for like every day, and then you just set it and forget it, you know, in a range. Yeah, just real DCA. And then dynamic DCA is something that I like to do where as we go lower, the amount that I'm DCAing goes up. So I'm not just DCAing a static amount. And then there's more of an active DCA where you say, I'm going to DCA on Fridays, but on that Friday, maybe you wait for the lowest point in the chart. Yeah, I found out recently that Cash App is US only. I didn't know that. Cash App, a lot of people get paid through Cash App, and Cash App lets you set all of your incoming funds to automatic Bitcoin payments. So you can literally pay yourself in Bitcoin for whatever jobs you get paid through Cash App for. Like if you're working Uber Eats and you happen to get it through Cash App or whatever. During the bull market, obviously it's a better idea. We've already hit the bottom. Bitcoin's going up for the next 4 years. Me personally, I don't want to get paid in cash at that point. I would much rather to get paid in Bitcoin. Slow breaking W's. We know what the problem with slow breaking W's are, so we're starting to see that weakness now, right? I'm just trying to explain why bother being on the 15-second. I know some people come in and they're like new to the channel and they're like, these crackheads are sitting on a 15-second chart. But we're judging the validity of our macro swings. Right? For me, the question here is, do I wait for 50% of that vector and see if we get any more to test a SAR flip at 65.5 before I TP? Or do I take a defensive take profit? Because the problem is I've been moving stops up this whole time, but you know how I feel about moving stops. Right? I'm not allowed to move a stop until we get a dip that takes out its tops. Right? So on the 5-minute, we haven't had that. So the only viable place for me to move my stop right now would be on the 1-minute underneath this range where we held the 50 and took out those highs. Right? But that's not good enough for me because I'm not giving all this back. So, you know, sometimes we talk about take profit. Sometimes we talk about move your stops up. This is one of those situations where you only really have two viable options. Let's say this does start to show weakness and look like it's going to come down, right? You could take profits, right? And just call it a W for however long you've been in the trade. Or you can set that emergency stop, right? Which is something that I like to do. So if I was convinced that I have to take profit here, like I'm not right now, but let's say I was. Let's say I'm like, nope, you know what? I'm not doing this. I'm going to take profit. Maybe I got to leave the house. Maybe I got to do whatever. Well, I was going to take profit anyways, literally right at this moment. So I would just find the nearest swing low, put my stop loss there and walk away. If it comes down and hit, cool. I was going to take profit anyways. I didn't lose any percentage by letting that play out. It's whatever. If for some reason it does the thing, then, you know, I got to eat a little longer. But what I won't do in this situation is wait for price to come all the way down to my stop loss. I would partial TP at the very least. Once I felt, you know, certain that price wasn't going to continue to the top side. I'm not there yet. But people react so adversely to stop losses, and I know why, bro. Because you got PTSD from getting stopped out, and then price does a 10x or something right after it stopped you out. I feel you. Everybody's been there. But it's to the point where somebody be like, bro, I don't want to take profit now. I don't want to take profit. I'm like, bro, just set a stop loss right where you would have taken profit and just walk away. They'll be like, yeah, but nah, because it's just going to hit the stop loss. And like, bro, you were literally just about to take profit and walk away from the computer. Like, what's the difference? On one side, at least there's a chance, you know, that your gut feeling maybe is right. Because that's usually what it is, right? You have a gut feeling that price is going to keep going, but there's no confirmation. It's literally just a gut, and you're not about to risk it, right? But look at our imaginary trade that we just talked about right now, right? I was convinced I needed to take profit. Instead of taking profit, I said, you know what? I'm just going to drop this and walk away. Maybe it plays out and maybe it doesn't, right? But you're still in the trade. Yeah, Scotty. That's why I don't understand, bro. It's like saying I wore a seatbelt, and the last time I wore a seatbelt, I got in an accident and I still hit the dashboard. So I'm not going to wear seatbelts no more. Like, that's not how life works. Yeah, I mean, that's a thing, right? Your exchange, skipping your stop loss, that's definitely a thing. And unfortunately, there's not much you can do about that except for just avoid exchanges that have the habit of doing that. Damn weeks comes to mind. What it is most of the time is low liquidity. Nah, I'm still long. I'm in a swing here. I've been shooting for 50% of this vector since we hit 59. I would like to notice that 70% went to 59% on if this W plays out. But we did get more votes though, so it's not people flipping votes. Yeah, 4-hour vector. When we came down on that big drop, wait, you'll see it here. The one that broke support. Oof, they turned this into a vector now. That's gonna make for some nice shorts when the time comes. Slow breaking W patterns create bear flags. Right? We talk about that all the time. This thing is starting to take structure. We need one more low. Bearish channels, anyways. You've already got one, but you don't want to cheat that wick. If you don't feel like it, then you need a lower low. But this is just a wick. We're talking 15-second time frame here. This is what I talked about when I said invites, right? Your bulls are trying hard to paint that W pattern party invite to the top side. And your bears are trying to paint that bearish channel. But this is why we have invalidations, right? $200 EMA. We still haven't broken golden pocket retracement. No, my swing short's already active, bro. My swing short's been active since November. Every long that I take is just a hedge on my micro strategy short right now. Rejected the 50. Invalidating the stopping volume candles. I mean, the volume profile is going to be different for everybody, right? 15-second, it looks crazy because there's just so much volume here. But I like to keep all my volume profile the same color, honestly. You could put on your value area high, your value area low. Honestly, I think that most people should. Um, After a while, you'll be able to see where it is just off of where your candles are. But up volume, down volume, honestly, it's all the same shit. I don't even like volume candles being red and green. I think it gives people the wrong idea. Big red volume spike doesn't mean bearish volume. A big red volume spike means that volume went up on a red candle, right? Which means that buyers stepped in on a red candle. So it yeah, I think it gives the wrong impression. The only difference is that your visible range is going to give you what's visible. Right. So I can pull all the way back and get the visible range. That's why it changes as price moves, right? As there's more information on the chart, it shows you more. But when you're trying to find your range here, of course, right when, boom, right? So if you're trying to find your range there, but you want to see what the range was here, right? Versus, or like how we do on the macro when we're looking at, when we look at these ranges as we go up, right? All you're trying to see is where the point of control is locally. Then you use the fixed volume. Right? So you're choosing how much information to put in. No, all the red means on the candle, all the red means on the volume is that the candle was red. So there's no, in other words, there's no way to there's no way to isolate on just a regular point of control one. I don't know why it's doing that though. It shouldn't be. Trying to find a chart where I've already done it. Right, it's like mapping these. Well, it's extending like that. If I changed it or something. But the real value for me is when you take these off. Because yeah, that's important. But mostly what you're doing is looking for your value areas. Right. So if you take those off, then you can start to come in and find where your ranges and your confluence are. Then you start to find levels where price is more than likely gonna find some resistance and support. Or where your point of controls meet up at. Let's go back to our 15-second chart here. So if you use your VPVR and you erase your VPVR settings from the fixed range, then you can use it to just throw up your range and your point of control real clean and neat like that. Which, in my opinion, is like clutch for range trading if you're not used to doing it by eye. I can't even talk to you about. Excuse me. I can't even talk to you about 69 until we get above 65. If we can't get above 65, I mean, 60, it's whole and half numbers. So 80s is as important as 70, but 65 is just as important as 72. It's like a heavy psychological number. Let's get rid of some of these. There's like way too many lines here that are left over from other shit. And so this is my fake stop loss because I had to walk away instead of just selling that we were talking about. We'll leave it there. we can actually adjust this to most touches. Can't break bodies though. Most touches without breaking bodies, even on the 15-second, or it's a no-go. All right, we can't do it. Yeah, I am, Pat. Little nasty ass little range. Look at how tight it's gotten. Trending down. If you're just tuning in, we're on the 15-second because there would be 148 sleeping people in here if we were looking at the 15-minute. Price action is leaving much to be desired. All right, we're getting close to our invalidation. Our M pattern is almost played out.
Let me short.
M pattern brings you down to the bottom of the value area. Livermore pivot.
Okay, let's go. Dump.
The CME chart is broken. That thing needs to be put in a museum somewhere. phase out now went down to 55% from 59 with the same number of votes. You guys aren't slick. Point of control. One minute. Sort of hugging that 50 EMAs, what's really giving us this giving us the support right now. We haven't lost our momentum, right? So if we kind of if we cut on our surf scalp indicator, you'll see we're still in a wave. Waves are getting choppy, but they haven't crashed onto the beach just yet. All right, we've got our first loss of momentum on a 15-second. Indicators letting you know that you're sniping short at this point. We're at our W invalidation. Measured move for the M pattern is almost played out. Value area low. Is invalidated. That leaves nothing but our bear flag. There she goes. My bad. I had to fix my stop loss. Measured move from the break of the channel, since it's not a flag, right? It's too long to be a flag. We're at it right now. Into those licks. And that is how you micromanage a top on the 15-second time frame. Asian market makers stayed within their 2% range, right? So no anomalies from Asian market makers at this time. I'm here, y'all. I'm just trying to finish something up. Make sure that all of this is right for tomorrow. If we start to come down and settle in a little bit, we'll go to that second part of chapter 9. I promised I would show y'all, so. But we got to let price action chill out first.
Big dub, big dub.
If anybody hasn't picked up the indicator yet, it's live on TradingView. You just got to type in the Cypher. And we should be the only ones there. Yes, sir. The full name is called the Cypher Suite Market Maker Magnets. Still not out yet. But that's part of the entire suite. No, I'm not really even thinking about getting back in a position until I finish eating some food. I took partials and moved my stop up. The partials make up for the stop being so far, and the stop makes up for not having to take complete. I'm here, y'all. I'm just eating my food real quick.
Pair target. I'm dialed in on the target, my G. Let's go. My dude, my dude.
Try food out. What are y'all up to?
I just saw something
What do we
horrible.
do? Lower high, bigger M pattern. A fractal continues.
Yeah.
It's just Asian session. We talked about Asian session only being 1 to 2% wide.
How many percent have we moved
Current
at?
Asian session is sitting at 1.76.
Oh. Is that done? China dumping.
This kid just be talking to himself. It's the funniest shit ever. Go grab that ashtray for me. What up? Just got back from the store.
Not much, man. Trying to get this TP down in. How do you feel about 63 flat? No, man. The 100Xs is looking kind of thick on top, though.
What was that?
Them 100X short liquidations, though. What's all that beeping?
My phone charger bugging out.
Oh, I was like, what the?
I'm glad you said something. I was going to ask because I didn't think it was my computer, but nobody else was saying anything. So I thought I must be the only one hearing it.
About to order a new charger right now.
Yeah, I've never heard it so bad.
I mean, yeah, this chart looks pretty straightforward.
Yeah, if someone could just unpause it, it'd be great.
What's the reason for the pause? Is it because there's too many shorts?
It's just the volume is shit, right? Huh?
Well, it sure looks like the futures are pretty thick here. But did you say the order book was pretty thin to the downside?
It felt like that earlier, yeah.
Hmm. Well, A, I would like to close my short down there, and B, I would like to find a knife. I think I'm gonna be able to do both. But just in case, let me go put my stop and profit here. I'm my short. right, good to go. Good to go. I'm thinking about that whole China, you said 2% move thing. So, just in case.
Hold on, yeah, I'm trying to wrap something up real quick. Oh my God, get off my phone.
Damn.
New tool drop in new tool drop in general. Either General's been dead lately or I've been building too quick because the last 7 messages are all indicators and dashboards. The indicator I dropped was the update to our cycle indicator. If you guys haven't seen it yet, I'll show you. So this is our old Bitcoin 4-year cycle indicator. You guys are used to seeing this already. And our updated one, let me see if I can pull it up. All right, so that's a new one. A little bit of upgrades on the colors. But more important, we added the table, right? Lets you know where you are, how many weeks that's the top, how many weeks to the bottom, how many weeks to the halving. Simple indicator, macro, surfer tool. Only need to pull it out every once in a while and, you know, look at it for a second. It doesn't live on your chart or anything. But so far, it has done a pretty good job of saving us some monies. Just looking forward to those DCA bubbles starting to pop out again.
September.
Yeah, free to use. Just go grab it. Invalidation for this M pattern still sitting at 6444. We're up against the bottom of that bear flag that we broke.
Whoa.
Mine's at 100 days. Let's check. You want to check against the yearly, or you want to check against the 4-year, I should say. Check 95. 60. Hmm. Interesting. You know, I don't like to play around with the numbers too much. But 85 has got a really strong correlation. 62% for the year, 72% for the month, 59% for the week, 52% current time frame. That's the daily. That's not bad. Versus just 1 up, 2 up. '85 is really strong. Look at that. '84 is probably as perfect as you can get it. But we know that the velocity of money sped up. It usually does during the tops, which is why I wouldn't want to get married to it. But that's the good thing about having the correlations, right? Before this, we would just go crazy trying to figure out what fits the best, like what looks the best. Right? We'd be like, well, that looks good, but if we remove the days, da 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 da. But now we can just trust the math. It being a bear market, it should be that decorrelated. That's interesting. You know what? I should probably run 2 of them. Wait, why did I do all that? Why is a green line down here though? It's the part I don't understand. So many cipher indicators. That's about the speed, right? The distance that the velocity is sped up. The reason that's interesting to me, right, is because if we are that correlated on the weekly, monthly, and current time frame, the chances of us taking this move up with global liquidity are kind of increased.
I went and had my Father's Day dinner, and I come back and I was expecting to see a lot more red. Crazy how it recovered like that.
Where the hell is what are you doing, bro? That's not what you're supposed to be doing. Not gonna lie, that is pretty interesting to me. My bad. You were saying something, Jacket? I was just nerding out.
Oh no, I didn't expect it to recover, man. I thought we were gonna go dippy.
Yeah, it held.
I mean, I wasn't shorting or anything, but I'm just saying, like, I reduced my position because it just seemed like a natural, cooling off period. But
No, I